Hello everyone, welcome back to this channel. Today I'm going to be talking about Irish tax system and the rates, what you need to know with regards to your salary and taxes in the country so you don't make any mistakes, and you also need to know the credits that the government has in place to ensure that people pay reduced taxes. So let's begin. First of all, you need to know that tax in Ireland goes towards the environment, towards health, towards education, towards social services, among other areas. And the tax in Ireland is regulated by revenue commissioners. And in this video, I'm going to be explaining how the tax system works and what you need to know to get started. You will need your PSA card. As a professional in the health sector, you need your PSA card, which is the public services card. And that card has your PPS number. It has your PPS number. I'm going to show you what that means as well. Your PPS number, which is the personal public service number, is your key to accessing public services in Ireland, such as healthcare and education. Your your PPS number is a unique reference. It's a unique reference number. It helps you to access social welfare benefits. It helps you to access everything that relates to the government. Even if you have kids in future and your kids want to go to school, they need PPS numbers to get enrolled in schools. They need PPS numbers. Everyone basically needs PPS numbers for one thing or the other, but even though some people don't need that if it's not applicable to them. But if you are coming to work in a hospital, you need a PPS number, and there is a way to apply. When you apply for your PSA card, that number is going to be given you automatically. Or if you apply for the PPS number, if you provide a proof of employment in the hospital sector, then you are going to get your PPS number. So that number is a unique reference number. It helps you to access social welfare benefits and public services and any other information that you need. The PPS number itself is always 7 numbers followed by either 1 or 2 letters, followed by 1 or 2 letters. It's like a unique reference number that identifies you as a person that needs access to government services. You can only get a PPS number if you need one. If you need one to access public services, for example, if you are starting a job, whatever your job is, you need a PPS number to pay tax. So if you are self-employed and you want to pay tax, or if you are employed, any sector whatsoever, to pay taxes, because no one can evade tax, so you need to pay taxes, you need PPS number to access that. Because if you don't apply for PPS number on time, if you don't make that declaration to revenue that you're working, you're getting paid, they are going to deduct emergency tax from your payment, because definitely your employer or wherever you're getting the source of your funds from, they will notify revenue, because they are all registered with Irish revenue. When they notify them, emergency tax is going to be deducted from you, which might be times 2 or 3 of what you are supposed to pay initially. So just to avoid that, you need your PPS number, and you don't need it if you're still looking for work. For example, if you have family members just coming into the country and they don't have work yet, they may not need it. But if they're applying for a job and they have the contract of employment, definitely they can use that contract to get their PPS numbers. Another thing you need to know is that you will need to provide this PPS number so that you can be paid and for tax purposes to your employer. You can't apply for a PPS number from outside of the country. You need to be in Ireland before you can apply for PPS numbers, and it should be one of the first things that you do on arrival. After you've arrived and settled down in the country, it's one of those things that you need to know. First requirement to get a PPS number, what you need to know is you must register for a basic MyGov ID account to access that service. You can go on Google and search for MyGov ID, all written together like I'm showing you on my screen, my gov id, and then create a basic account. You can create a basic account. If you don't go on my gov id, when the time comes for you to, when you want to apply for your pps number, then you can actually go through that portal of application to apply for to get your registration. So I'm just going to switch my screen back to my explanations so that you can get what I was explaining to you. So you must register for a basic MyGov ID account to access that service. So you can get that when you want to start your PPS application on the very portal that you can apply for PPS number. You will get a link to sign up for MyGov ID account, or you can first do that by going to MyGov ID website to create one. I'm going to explain more what I mean by that as we go along. I'm going to explain more so that you can understand more as well. And what you also need to know is that to get a PPS number, not only do you need your MyGov ID basic account, you need to know what rules apply for getting a PPS number. And one of the rules is that you must provide evidence of your identity, and you must also provide documentation on why you need a PPS number, and you must provide a proof of address. So make sure you have those three. I'm going to explain what each one means. We're still talking about the preliminary requirements on getting registered for taxes and so that you can avoid paying emergency tax, and how you can also understand the credits that might apply to you and how you can pay reduced taxes as well. Number one rule, like I mentioned, is if you want to get a PPS number, you can apply. You can go to the registration centers. They have registration centers in every county. In trio centers, they call them in trio centers. Sometimes they have limited hours. You might need to go on their website or check online, or most of them you would have to book appointments online beforehand. So make sure you know that if you are in Dublin, you must first make an appointment via the My Welfare website. So you can book an appointment to apply for your PPS number. So that is the link I'm showing on the screen. That's services.mywelfare.ie, and via that link, if you are choosing apply for PPS number, you would be given an option to first create an account, a basic account, on the MyGov ID website. So you don't need to bother yourself about that. When you want to start, you have every documentation, everything ready to book appointments, to go to physical location, then you can visit mywelfare.ie. But before you visit that, I'm going to explain more things that you need to know. On your proof of address, when applying, make sure you bring valid photo ID, such as your passport or your proof of address. If you don't have a utility bill, that's your electricity bill or gas bill or water or your address or proof of address, and if your name is not on the tenancy agreement, your employer can provide a letter verifying your address. For example, some people, when they come into the country, maybe their employer provided accommodation for them within the hospital premises, and in that case you don't have access to the utility bill of the apartment where you are. What you need to do is to get a letter that verifies that address from your employer, and that letter should also explain that you are living and working in Ireland. That's what you need to know. Now, on your proof of address, it shouldn't be more than 3 months old because they will check the dates on that. If you're using electricity bill, the bill on that, the payment date shouldn't be more than 3 months old. The document should show your name, not someone else's name. It should review your own name. So that might be a problem if your name is not, or if it's someone else's name that is on that. So you might need a document in your own name. Sometimes you might need a letter to back it up, or if you are living with someone, you might need a confirmation of that person that you are staying in that house. Household utility bill, you can use that in your name, or an official letter or document, or a financial statement that has your name, maybe your letter from the bank that has your name and address on that. And if you have a property lease or tenancy agreement from a contract of tenancy from letting agents, you can use that, or any confirmation of address by third party agencies, you can also use that as well as your proof of address. If you are staying with friends, maybe you are sharing a house and it's not you that is making payments for utility, or you're living with relatives or any other person, an original household bill plus a note from the bill holder confirming your residency at the bill address is acceptable. So what you need as your proof of address is the utility bill from that house, even though it's in someone else's name, but the person that owns that needs to write a short note on the bill itself that you are living at that place. Needs to confirm in writing, sign and date that. Now, you also need an evidence for applying and your personal details. If you want to apply for PPS number, they need your evidence. Why are you applying? You need a physical documentation for that. You will need to provide details about why you need a PPS number and submit documents to support this. Like I mentioned, you also be required to provide personal details about yourself so that you can be identified. If your reason to get a PPS number is to take up employment, is to start employment, you must have a signed offer of employment. You can use that as your reason from your employer, confirming when your job is due to start, even if maybe you are doing the adaptation or you are doing exam, or you are in the country, you are yet to resume, but you are going to resume anyway after when you finish all your registration. Then you would need your PPS number. This letter should be letterheaded, and it should have your employer's contact details and the registered number of that employer as well. You don't need a PPS number if you're still looking for work. Like I said, you need to make sure you have the contract first before making that bold step to apply for your PPS number. On kids, every kid, they have PPS number. What they do is they don't give them public services card, but they issue them PPS numbers by on an A4 document. They give them PPS numbers because they need that to enroll in school. But if you're working in a hospital facility, they will issue you, when you apply for your PPS number, you will be issued with a card. The card has your PPS number on it looks like a small ID card. It has your PPS number on the back of that. Then you may need a PPS number if you want to apply for social welfare payment, like people who are not employed yet. They are entitled to unemployment benefit. So any social welfare payment, you need your PPS number. Like if you want to apply for child benefits, payments for kids support for available to all parents, you need their PPS numbers as well. To access medical services, you need your PPS number. To apply for or exchange a driver's license, if you want to renew your license, if you want to get your learner's permit, or if you want to apply for license, you need your PPS number, because you can't even access any medical services, any public services, anything whatsoever that requires government institutions. You can't access them without your PPS number. To access other public services, you need your PPS number, or if you want to enroll in a school or college for people coming into the country and is not for working at the beginning, it's going to be for studying in the school. You definitely need to get your PPS number when you arrive. Make the appointment, get all the required documents, and proceed to apply for your PPS number. In that case, your evidence of the reason is going to be your letter of offer of admission into that program. And on your identity document, you will be required to submit evidence of your identity, such as a passport or a national ID card, and your proof of your address, such as utility bill, like I've mentioned. Now, on identity, what you need to know, there are different categories of people, and there are different identity means of proof of identity that they could use. If you are an Irish citizen born in the Republic of Ireland, you can use your birth certificate or your photographic ID, such as your passport or driving license, as your proof of identity for applying for a PPS number. If you are an Irish citizen via naturalization or foreign birth registration, people that were living in the country and eventually applied for citizenship and became citizens by way of naturalization, you could use your current passport, or which is going to be the Irish passport, or your certificate of naturalization, or your foreign birth registration certificate. And if you have Irish driving license, you can use that. If you have UK driving license, you can use that. Or you have a learner driving permit, you can use that as well. Again, that what I have mentioned is just for Irish citizens, those that became citizens by virtue of naturalization. Now, for Irish citizen born in Northern Ireland is a different country under the United Kingdom. It's not the Republic of Ireland, but a different country. So an Irish citizen that is born in Northern Ireland, or UK citizen, to apply for PPS number, you can use your current passport, or use your birth certificate, or that shows your mother's birth surname and your current driving license. You can use that. For European citizens other than Irish and UK, you can use your current passport or national ID card to apply for your PPS numbers. And for everyone else, if you're from outside Europe, you will need your current passport. Anyone outside the European country, if you want to apply for PPS number, either for work, either for study, either for other reasons, then you need your current passport. Then know that some documents are not acceptable as proof of identity. Like if you are submitting a baptismal certificate as an evidence of birth certificate for those concerned, for Irish citizens, that might not be accepted. And employment identity cards or personal letters, that's not acceptable. Then copies of certificates or documents or expired documents. Your passports would, if your passport has expired within the last 12 months, in some cases they may accept that, but generally make sure that you renew your passport on time and you have significant number of months on that passport before you proceed to apply for PPS number. Then if you want to start your application for PPS number or your PSC card, like I mentioned, public services card, you can visit mywelfare.ie, written together like I'm showing you on my screen. So mywelfare.ie, and online PPS number application services is available at that website for people who are in the country that are 18 years and above. So you might need to visit the website, apply for yours, and make sure that you follow all the instructions. Now, when you visit that website, what you're going to see when you select public services, personal public services number, which is PPS number, you would be asked to create a basic MyGov ID account. So if you have one previously, if you visited MyGov ID website directly and you've created a basic account, you don't need to create another one again. You just need to sign in with that very account that you have created. But if not, you are going to get a link on mywelfare.ie asking you to proceed to create a basic MyGov ID account. All you need is your full name, your first name, and your last name, and your email address. If you have a middle name, your middle name should go with your first name. So when you write your first name, you write first name dash middle name and your email address. When you've done that, you are going to get an email with a 6-digit code, and that is for verifying your account. Once you enter that code, you have created your basic MyGov ID account. That is all you need. MyGov ID is a single secure online identity which makes it easier to access a range of government services. Like if you want to go on driving licensing website, they might ask you, do you have a MyGov ID account? You can use that to log in and access. It's a single identity which connects everything you do that relates to the government. So you need that, and it's very, very safe and secure. After you've created your account, then I want you to, and you have applied for your PPS number, then you need to understand tax and tax rates in Ireland. Your PPS number might take 1 or 2 weeks to arrive, but they'll send it by post to you, the address. That's the purpose of verifying the address they asked you to send a proof for. So they will send that to you. Now you have your PPS number ready, you have a basic MyGov ID account, and while you're applying for PPS number, you've also logged in on my welfare website to access everything you've applied for. Then the next thing you need to know is that you need to understand taxes and tax rates in Ireland and how they work. You need to understand that. So in Ireland, you'll be taxed with through the PAYE system, which is pay as you earn system. This means that each time you are paid, your employer will deduct your income tax. Your employer will deduct your PRSI if that is applicable to your salary, and your employer will deduct USC as well if that's applicable. I'm going to show you what that means, and at the end of this class lecture or video or my explanations as you're watching me, I'm going to also show you in a few minutes how you can calculate your tax rate based on a salary. I'm just going to show you an example of how to calculate that. Now, pay as you earn system, what does this really mean? Aside your income tax, PRSI and USC, everyone is entitled to tax credits in Ireland. Tax credit simply means that it's a government relief from your tax. For example, if your tax for the whole year is meant to be 200 euros, then for example, if it's meant to be 500 euros and you have a tax credit of 200 euros, then it's going to be minus. After your tax has been calculated, they will remove your tax credit from that. So when they take off 200 euros tax credit that you have from the government, then it remains 300 euros, and that 300 would be divided by the number of times you would get your paycheck in that whole year. Now, what do I mean by income tax? What do I mean by PRSI? What do I mean by USC? And what do I really mean about the pay as you earn system? I want you to know that Ireland has one of the highest rates of tax relief in Europe. If you've heard that so many people say, maybe when they travel to this country in Europe, I don't want to mention names, that the tax rate is extremely, really, really high. And it's good to know that Ireland has one of the highest rates of tax relief generally in Europe. I'll explain to you what that means. Now, income tax is charged as a percentage of your income, And there are two tax rates in Ireland. The first part of your income up to a certain amount is taxed at 20%. I'm going to show you an example of that. For example, if they say that if your income is 20,000 euros in a year, if that is your estimated income, which is 20,000 euros in annually in a year, then that means that, and the government says and the government has a law that says any income that is 15,000 euros in a year, that has up to 15,000 in a year should be taxed at 20, and anything above 15,000 should be taxed as 40%. So I will explain what this means. So there are two tax rates in Ireland. First part of your income up to a certain amount is taxed at 20%. So that certain amount is a fixed one by the government, and I will show you the different ranges and what could apply if you are single, if you are married, if you are a widow, for example, or other things that you might need to know. So up to a certain amount is taxed at 20%, and after that fixed amount, anything else above that is going to be taxed at 40%. So you up to that certain amount that is taxed at 20% is the standard rate, and the remainder of the income is taxed at 40%, which is known as the higher rate. And the cutoff point for the standard rate depends on your circumstances. That means it changes for different people. It could be something else for someone. For maybe 5 people are living in a place, 5 of them could have different standard rates depending on their circumstances. So I'll explain to you, and we have an opportunity to do an example as well. Now, PRSI means pay related social insurance. Some people some facilities don't even have that. Some job offers don't have that, but generally PRSI, most people in government employment, they would pay PRSI. It's different from the income tax in the sense that it's used to fund social welfare benefits and pensions. So if your salary is less than 352 euros per week, you are not going to be paying PRSI. But anyone, that is a standard. If your salary is above 352 euros per week, then they might be paying PRSI, and I'll show you what that means at a rate of 4%. 4%. I'll show you what that means as well. Now, USC is another fee that is charged, which is called Universal Social Charge, which everyone would pay. This is paid by anyone earning more than 13,000 per year. So if you have a job offer that says your salary is 20,000 euros annually, definitely that is more than the rate. That is more than the fixed rate, which is 13,000 per year. So you are going to be paying USC. So if you earn more than this amount, you pay USC on all your earnings. The rates have decreased steadily each year since its introduction, and have dropped again in the recent budget, and I'll show you an example of that as well. Now, this is the standard rate of USC that you are seeing on my screen. That was last in 2016. So if the person is receiving up to 12,000 euros, the rate of USC paid is just 1%. Just 1% of the size, extremely small. And USC is if the salary is between 12,000 euros, 12,001 euros to 18,668.00, 3% USC is paid. Because when you start working and then you get a chance to view your pay slip, you will see this that says tax deducted, USC deducted. you will see PRSI deducted, so that you can understand what those means. So standard rate for anyone that the income is between 18,668 to 70,044, that is going to be 5.5%, and 8% for any income that is between 70,000 euros to 100,000 euros annually, and 8% for any payee income over 100,000. And if one is self-employed and your income is above 100,000, because when you are self-employed, you need to register your business with the government and declare your income as well. So if the income that you generate annually is more than 100,000 euros, you will be paying USC that is above 11% of your salary. Now I want us to understand this. This is just a table to explain more about what I've been saying on tax rates and bands. So generally, from 2018 to 2022, this is a table of comparison. This is one of the circumstances. Like I said, tax rates depend on the circumstances of the person. If someone is single, or the person is widowed, or a surviving civil partner without children, in 2018, the fixed amount for 20% standard rate tax is 34,550, but now the fixed amount has been increased to 36,800. That means that when the government is calculating your tax, up onto, if your salary annually is 40,000 euros, for example, if that is your salary, when they are calculating your tax, it's going to be out of 36,800 of your tax, they will calculate 20% of that. That is its standard rate, and then deduct this 36,800 from 40,000. Whatever is left, if it's that should be 3,200 euros, for example. Over on 3,200 euros, on that balance, 40% tax is going to be calculated. So that 40% on the balance and 20% on the remaining up onto to the fixed rate is going to be the income tax. And I will explain others as we go along. This was in 2021, 2020, 2019, 2018. Those ones are not really relevant. We could see the trend that previously it was low and now it has increased. I mean, the fixed rate up onto which 20% standard rates can be charged. So if your salary is 35,000 annually, for example, you don't need to worry yourself. Your salary, your tax rate is going to be 20% standard rate. But if you earn above that, above 36,800, the balance on top of the fixed rate, the balance is going to be charged at 40%. So it's not going to be all your tax that is going to be 40% rate charged. It's just going to be the balance above the standard. It's going to be the balance above the standard. That's for single, and this is married or in a civil partnership, and one spouse is, or one civil partner is working and with income. So that is increased, extremely increased. It means if you are married and maybe your spouse hasn't been working or hasn't started working, then your spouse will need to also register with revenue in her or in his own name, and register and declare that they haven't started working yet. And when they evaluate you as married, they will evaluate, because you need to register and connect your accounts together. When they evaluate you as married and they discover that only one person has been getting paid, what they will do is that it's increased. The fixed rate for deducting 20% standard 20% tax is 45,800 euros. And if your salary is more than this, if it's more than 45,800 euros, then definitely on the balance 40% would be deducted. 40% tax would be deducted. So this is 2022 45,800. You could see all the years previously, that's 2021, 44,300 as well in 2020 and 2019, and in 2018 it was very low, 43,550. So it's been increased to 45,800. So up your salary up until 45,800 is going to be charged at 20% rate. Now, charging per rate, either by standard rate or by higher rate, doesn't mean that you will be paying that all of that compulsorily, because you still have tax credits that would be applied. You still have tax credit that would be deducted from your total calculation, and you could also have access to tax reliefs of some kind, which I'm going to explain what those also mean. And married in a civil partnership and both spouses are working, if both partners are working, then the fixed rate for 20% is 45,800 with an increase of 27,800 max. It's still going to be charged at 20%. This literally means that this is for one spouse. It's only for one spouse, because the increase can't be transferred between spouses. So it's for only one spouse. 45,800 at 20%. It's with an increase up until 27,800. And that increase can't be transferred between spouses. It has to be only one spouse that has the increase, and anything else above that is going to be charged at 40% tax rate. Anything else above that, just the remaining balance, is going to be taxed at 40%. Now, single, widowed, or surviving partner qualifying for single person, like this is single parents. You are single and you have a child that you're caring for, or you have kids. Your tax is also increased. The fixed rate is also increased. So 20% is going to be charged from up until 40,800 annually, and any balance from that is 40%. Any balance over that, like I said, so this is just the standard and the fixed rate, just so that you can understand. And when that is calculated, then they would have to deduct all the tax credits you have, and all the relief that you are entitled to would be considered. Now let me explain more. On tax credits and allowances, these help to reduce the amount of tax you have to pay. There are many kinds of tax credits available. There are many types of relief available, including there is credit for those with disability. If you have a disability of whatever kind that is limiting your impact in what you're doing, you might need to apply for tax credits with tax relief with revenue. You might need to apply for that, for disability credit, and they will give you that. Single parents, there is significant relief for them. Older people above 65-year-old, there is significant tax credits added for them. Tax credits are deducted after the tax has been calculated. Like I mentioned, for example, if you have a tax credit of 200 euros, and when your tax has been calculated up onto a certain amount, they charged 20% tax, and the balance over that they charged 40%. Then if everything has been calculated and it's discovered that you are meant to be paying this amount of tax in a whole year, then your credit would be deducted. Generally in Ireland, everyone is entitled, every worker is entitled to 3,400 euros tax credit automatically from the government in this 2022. So you're entitled to that 3,400 euros as tax credit from the government. So whatever your tax is, eventually it is going to be deducted from the total. It is going to be deducted from the total as a way, it's a way of regulating taxes and to make sure people pay less as well. So it's a standard. Whatever tax rate you have calculated with your tax with your salary, eventually after everything, then you would need to deduct the the standard tax credit of the government from that before you can consider what you'll be paying and what you're not going to be paying. Now, tax allowances are deducted before your tax is calculated. Your tax credit certificate would list all your tax credits and all the reliefs for the tax year. To apply for your certificate, you first need to fill out the form that is on myrevenue.ie. It's on revenue.ie, not myrevenue.ie. So revenue.ie, when you have your PPS number, you have your basic MyGov ID account, and you've already gotten your PPS number after applying for that. The next thing you need to do is to register with revenue.ie. You need to visit revenue.ie to fill out this form that is saying that is form 12A. You need to fill out that form and send it to the tax office. You can fill out that form online to declare that you are working and to declare all the details of your employment as much as possible. If you are changing jobs as well, you need to go back to my revenue and also notify tax office that you are changing jobs, or maybe your employment has ceased for a time being. And when you do that, then they will send your tax credit certificate to you, and you can understand what's written and what's not written. If you don't do that on time after you've gotten your PPS number, your very first payment or second payment, or until you fill out the form and submit and notify tax, you will be paying emergency tax, which is not even the standard rate. It's extremely high rate, which could be ×2 or ×3 or for what you are meant to be paying with no credits applied. That is the implication. You can, after registering for tax, after registering with revenue, eventually, when you can claim all the emergency tax that you paid back, the excesses over that, but definitely it's not going to be immediate. It's going to be after that year is over, and then you can apply to revenue for a tax refund, and they would go back and recalculate all your credits and when you started work and everything. So it's better to register with revenue on time with your PPS number and declare your work as fast as possible, because if you end up paying emergency tax, then you would have to wait until that very year is over. Maybe you didn't know you started a job and you've paid emergency tax for like 6 months. That's extremely high tax, which most people think they just start working and no one tells them when they start. Eventually they notice that they are paying this huge amount of tax. That is emergency tax. You need to make that declaration. If you've paid that for like 5-6 months, you would need to wait until that year is over before you can get it back. But if you register on time and get your PPS number and register with revenue and declare, fill out the form 12A, you will get your tax credit certificate and no emergency tax would be applied to your first salary. That is the implication. I'm going to show you an example of how we can calculate that successfully. Now, to prevent emergency tax deductions, first of all, note that income tax is deducted from your pay and at an universal social charge at emergency tax rates by your employer in certain circumstances. If you are notifying the revenue, your employer is not going to know, and your employer will just automatically deduct that from and send it to the government. So to avoid paying emergency tax, you need to give your employer your personal public service number, which is your PPSN, and you need to ensure that your job is registered with revenue. You will need to do this as soon as possible so that your employer receives the revenue payroll notification, which is RPN, before your first payday. So your employer can receive a payroll notification from the revenue, from the tax office, before they give you your first paycheck, and that's the only way to avoid paying emergency tax. Like I say, you can always get it back if you have paid emergency tax maybe for 1 month or for 2 months, but it's not going to be immediate. You will have to apply for that after that year is finished. Most people apply for tax refund for the last year, in the month of January or end of December. So to register your job, you need to visit www.revenue.ie. Like I mentioned, you can't just visit that. You need your PPS number. You would have followed all the instructions that I explained earlier on. And another thing, when you want to claim a tax refund, if you are not employed, or people not employed, maybe they were working before and then the employment ceased, your employer would have to notify revenue when you leave the job. Most employers, they don't even have time for that, but it might be you doing the notification yourself. If your employer is doing that for you, they definitely need to include a date of cessation on your final payroll submission, and they will need to show the following details for that year: your pay, your income tax, all the USC that you paid, and any PRSI, which is your social insurance that you paid as well. That is going to be available to you to view in your account, which is my account. You see that in revenue website. In revenue, when you have created the accounts, when you've registered your job and the job ceased, or maybe you are changing jobs, I know you are not working temporarily, to avoid paying that for those tax for those periods or months, you would have to declare that you were not working during those period. And if your employer fails to notify revenue, you are finished. You can do that yourself. When you log in into your revenue with your MyGov ID account, you can access your account to seize your old job. And you just need to select update job or pension details on the payee services card to do so. You can do that in your account, in revenue account. Now, other forms of taxes to pay in Ireland are motor tax or property tax. Motor taxes, if you are driving, you would have to be paying taxes for your cars, and the tax deducted for paid for cars depends on the model of the cars, it depends on the engine, depends on the drive, it depends on the lifespan of that car. So you need to understand that it's a way to save if you use bicycles or you use electric scooters. But if you have large family and you think your work is far away from where you live, you might need to be driving. Eventually, when you get your license, or first of all your learner's permit, you will definitely need to pay motor tax, because you can't put any car on the road without the tax disc. Property tax, for people that own houses, they pay property tax as well. VAT is another tax rate. In some shops, maybe you want to buy paint, you might see some products with VAT, which is the value added tax. It's on consumer, it's on certain prices, usually at the rate of 23%. It depends on what you're buying anyway. It's not applicable to everything, and it's not applicable to every shop. So just be careful what you buy. If you are trying to save, then don't go for products with VATs. Income tax credits and reliefs is another thing you need to understand before we calculate. Like I mentioned earlier on, tax reliefs would reduce the amount of tax that you have to pay. It will reduce the amount of tax that you have to pay. The tax credit is automatically applied, which is the standard at the government standard for every worker. Then your tax, aside tax credit, you also could have access. You also could have tax reliefs on your account, and I'll show you what I mean by those. There are different types, and it depends on circumstances of every person. If someone is with disability, there are tax credits and reliefs for that. Like I mentioned, there are tax relief on medical expenses. Like if you're buying drugs, you need to keep all the receipts. If you visited hospital and you were asked to pay for whatever reason, you need to keep all the receipts of that. If you visited a GP, you paid, and you need to keep all your receipts of payment, because when you keep them at the end of the year and you want to apply for tax refund, you might need to declare all those receipts so that they can recalculate for you and give you a relief on your medical expenses. Another thing is tax relief is available for private health and long-term care insurance. It's also available for certain medical expenses. So if you are buying things, or like in the pharmacy, if you are visiting hospital, maybe you had to undergo a procedure, you might need to keep all the receipts, because you can claim taxes back over those things. Other people's tax credits and relief, there is significant tax arrangements for people that are aged 65 and over. There's also employment tax credits and relief, people for people working. If you are working from home, there is also tax relief available, especially on electricity costs, on heat and use of broadband. You will need to provide a proof that you were working from home during that period, because if you were working from home, definitely your employer has already paid taxes on those things like electricity, heat, and broadband. You wouldn't need to duplicate them anymore, so you might get a relief on that. It's possible to also claim tax relief on certain housing expenses. People that are separated, maybe before they started, they were married, and eventually maybe there was a separation or a divorce. If any circumstance has changed, you might need to inform revenue and seek relief on the taxes you have paid within those period. Changing personal circumstances following separation or divorce may have implications for how you are taxed, so you would be charged lower. Maintenance and tax also relates to treatment of maintenance payments made by one spouse to another spouse, or single persons that have kids to raise. They have their own relief as a tax credit, or people from whose loved ones died unexpectedly. Those periods, they could have tax reliefs and credits applied as well. If you are doing a third level education, there is significant tax relief for you. If you had admission for a program, maybe you are working now, you want to start a program, or eventually, or maybe you are starting in a school because of a master's degree or any other thing, even if it's postgraduate, then you also qualify for relief. You would need to declare the receipt of payments for your tuition. You would need to declare the receipt of payments. Home carers, they have their tax credits as well. Like if you are married or in a civil partnership and you care for a dependent person, you can apply for the home carer tax credit. There is also bike to work scheme. Most facilities, they have this bike to work scheme for their employees. If you need a bike to work and you think you can't afford it temporarily, you might go to your human resources department to explain to them that you want to apply for the bike to work scheme. Bike to work scheme literally means that you are not going to be taxed on the amount of the bicycle you want to buy, and the employer can purchase that from you for you. When your employer purchases that, then you would be repaying them. You can be repaying them monthly, from depending on your plan, from your salary. You can repay your employer, but your employer would cover all the initial costs of that bike. Then if you're starting your own business, you should also apply for tax relief as well. The Start Your Own Business scheme gives relief from income tax for 2 years. If you're a long-term unemployed person who starts a new business, you might need to apply for that as well. You would need all the receipts of all your expenses during that period. Now, the other thing you need to know is, how would you calculate your tax rate? How would you calculate? I'm going to show you an example. This is one of a very good tax calculator that everyone uses, Deloitte's Irish tax calculator. So to get an idea of how your tax rates and credits will work out based on your expected salary and circumstances. For example, if you know that maybe your employer has already given you this, that this is the amount you're going to be paid annually or yearly, then you can take a look at that calculator and try and calculate what your salary might be like, what your take home eventually might be like. And I'm going to show you that now. So this is what it looks like basically. Deloitte tax calculator. So you would need to fill that out. Are you single, married, or widowed? I'm just going to leave it as single. Are you an employee? Yes. Are you a director? No. Are you a controlling shareholder? No. If married, do both spouses have income? So this is our first example. So for singles. First example for singles. So for example, what is your age range? Under 65. I don't want to. You can also try it out, look it up based on the link that I showed you earlier on the this is the link, http://services.deloitte.ie. You can look it up and put all your circumstances and see what your take home might be like. Age attained during 2022. You don't really need to do that. Have you made a qualifying pension contribution? No. If you know that, you can write what you have contributed. If you don't know that, you can just leave it as no. You only need an idea anyway. Does your employer pay your health insurance subscriptions? No. If yes, enter amount paid by your employer if you need that. But definitely you don't really need, because if it's a first job, you're not going to know what you're going to be paid or what your employer is paying. So you can just put your expected income. Let me put 25,000 annually, for example, 25,000 euros annually, for example, and by that let me calculate. This is for single who is not paying anything. So this is what the Deloitte is showing. This is what the Deloitte is showing. So total income 25,000, like I put it on the form, and the income again is 25,000. Health insurance, you don't know yet, so that's 0. Qualifying pension deduction, you don't know yet. Carer allowance, that's not applicable. Tax at lower rates, that means up until a certain amount, like I explained earlier on. I think that was above 35 or thereabout. So that was above 35, charged at 20% tax. That means, because this is way below, 25,000 is way below the fixed rate for standard charges. So that means everything is going to be charged at 20%. That's why 40%, the balance over that says 0. So 20% is tax is going to be 5,000 from this. That means if your annual income is 25,000, the tax you are meant to be paying, if it's charged at 20%, is 5,000. Now, this is not going to be the final tax you're going to be paying, because, like I explained, the credit is yet to be applied. So you need to calculate that first. So that's 20%, which is 5,000. Now, tax credits, the fixed tax credit for workers in 2021, that was 3,300 euros, like you can see on my right hand side. But in 2022, the tax credit has been increased to 3,400. So that means this is going to be deducted from the total 20% that you're meant to pay, and net tax is now reduced to 1,600. So it's now reduced to 1,600. When you reduce that, that means this is going to be your income tax for the whole year. And if it's for the whole year, based on your salary as well, the PRSI, you remember when I was showing what PRSI means and what the social charge means. PRSI, someone that is charged, that doesn't have to pay. If your salary is below 300 euros, then you don't pay that. Then if it's above, then you might need to be paying 4%. And universal social charge as well. Some pay 1%, some pay 3%, depending on their circumstances and on their salary. So for 25,000 income, your USC standard based on that would be 412 euros. the PRSI would be 1,000 euros for the whole year, Now, when you've done that, then you had all of this together, 1,600, that's your tax, your PRSI 1,000, and the universal social charge, which is 412. When you had all three together, that is going to be the deductions that your employer is going to be deducted from you, the standard deductions. Then you take them off from 25,000. What is left would be 21,988. 21,980. That's annually. When you divide that into monthly, when you divide that by 12 into monthly, it is going to be 1,832, which would be your take home when you divide that. Because when you are paying this 1,600, 1,000 and 412, you add all of them together, it's going to be for the year. Then you deduct them from your total salary in that year. Then you are left with your annual net income, which is 21,988. And then when you divide that by 12, 1,832 euros. So and then if you divide that by 4 weekly, if it's every 4 weeks, or maybe some people are paid every 2 weeks, then you would know exactly what your take home would be. But for the month, for a salary of around 25,000, this is going to be your net, and your circumstances might change. If you need more relief, if you are entitled to other relief, maybe you're single or married, that is all going to reflect on the tax you'll be paying significantly lower. So that is an idea basically of what you need to do. And now when you have an idea of what your monthly net income might be, then the next thing you would need to do is to start thinking about plans to save. Like, would you consider sharing houses with someone, or family, friends, or even friends? You might consider sharing options for saving. And when you want to rent, you might try and consider locations that are actually way cheaper, so that you can save as much as possible. So that is it basically. I hope I've been able to clarify so many things about the Irish tax system, and I hope I've been able to explain the rates as well. Don't forget to give a like to this video. Don't forget to leave a comment down below. Don't forget, if you haven't subscribed, don't forget to subscribe and turn on your notifications so that you don't miss another video. And don't forget to share this as well. Thank you so much for listening, and I'll see you in the next video.